Hello, everyone, and welcome to today's live webinar, the ACCA Enrichment session for paper Strategic Business Reporting. And thank you so much for taking the time out and being here today on a Saturday afternoon with all of us. Now, if this is your first time joining the enrichment session, welcome on board. My name is Joanne, the Manager of Learning Support for ACCA Malaysia. Together with me this afternoon is our ACCA Expert Tutor Guru, Mr. Tom Clendon. You can see him in the video live there. Yeah. So we will be opening up for Q&A throughout the session. So if you have any questions for Tom, just pop them in the chat box. That's how you just type in just now at the bottom right-hand side of the screen below. You may select send to everyone, and Tom will actually address your questions whenever possible. Okay. So let's not delay the session anymore. So I will now pass the floor to you, Tom. Thank you.
Okay, thank you very much, Joanne. Welcome, everybody. I'm going to start by sharing my screen and running through a PowerPoint presentation. So I hope we are all well today. Saturday afternoon for you. I'm here in the UK, so it's Saturday morning for me. So I'm just curious where you are. Where's your nearest city? Can you use the chat box just to tell me where you are? And Johor, Kuala Lumpur, okay, Malacca, yeah, no, been to all these places. Ipoh, fantastic. Right, so we got right the way across. Cyberjaya, yeah. Putrajaya, fantastic. Okay, all right, well, I'm in St Albans. I'm in London, near London. So the power of technology is a wonderful thing, isn't it? This is what we're going to do this afternoon. We've got a 3-hour session, and we'll take a couple of breaks during it just to make sure we stay fresh. One of the things I'll be doing is demonstrating the practice platform. I want to share with you some tips and help you pass the exam in September. And there's a couple of issues, therefore, that I particularly want to highlight on in terms of a current issue, sustainability. And then we'll wrap up the session with one of those tricky areas of cash flow and try and give you a fresh little spin on that. So first thing I want to do is to introduce myself to you. Some of you perhaps have, you're familiar with me, but for the avoidance of any doubt, I studied ACCA. I did the exams whilst I was working. So I know that juggle, I know that conflict and that responsibility of holding down a job and working at the same time. It took me several years to qualify. And I qualified whilst I was working for KPMG. But shortly after I qualified, I realized that actually working in audit and working in insolvency wasn't really my true vocation. I found myself working for a training company, which became FTC, and then later we became Kaplan. And I had the opportunity of running the London office out of Borough High Street for Kaplan, for ACCA, always teaching, and always having the opportunity of traveling around the world. And I had a great time. I left Kaplan about 7 years ago now and went and relocated to Singapore. And that's how I continued my love affair with Malaysia. I first came out to Malaysia teaching in, I think, 1998. And for many years was doing revision courses there. And then when I was working in Singapore, obviously I was then traveling a lot in Malaysia and around the region. But I came back 3 years ago and I wanted to do something different. And so I've gone for this online approach. So I now teach online, which means that I'm very active on LinkedIn. And one of the things that you can do is to connect with me on LinkedIn, and you'll find lots of free resources that you will that I post about ACCA and SBR on LinkedIn. I also do a podcast, and that's something I'll refer to again later, but something that I think you should find useful in the build up to your revision is this free resource of listening to me talk about deferred tax, leases, all sorts of things. And I'm lucky enough also to be engaged by ACCA in this capacity to help students and to help lecturers. But look, I've introduced myself, but actually this session is about you, and this session is about SBR, and it's therefore a two-way street. And therefore I want to find out a little bit more about you. And what you should be able to see on your screen is a poll. And I would invite you, please, to self-identify. There's no right answer here. There's no wrong answer here. But I'd like you just to tell me in this, and tell everyone else effectively. It's anonymous, totally anonymous, where you are in your journey. Are you someone who's passed skills and SBR's first time? Are you someone who's been exempt from skills and SBR is your first time? Or are you somebody who's got some strategic professional under your belt? We've got nearly 150 people attending live, and I can see that nearly 80% of us have voted. Let me just give you 5 more seconds if you haven't yet voted. 5, 4, 3, 2, 1. Okay, all right, let's have a look at what the results are. And it's pretty much an even split, really. 39% of you have come up through skills. Now, if you've come up through skills and SBR is your first paper, the practice platform and the format of the exam is slightly different, and that's something you've got to get used to. If you've been exempt from skills, then you've got this great opportunity to learn about the ACCA practice platform from scratch. And it's really important that if you've been exempt from skills and you haven't been using the practice platform, and that's one of the things I'm going to be doing today. And if you've already passed a strategic professional exam, congratulations, you know what it takes. Yeah, and it takes some dedication. It takes some dedication. And you are doing the right thing on this Saturday afternoon by giving up your time for me and to help me help you pass the examination. So let's have a look at another poll. There's only 3 of these polls, just a quick little introduction. And again, it's about finding out a little bit more about you so that I can just kind of tweak this and understand where we're coming from. And this is about your relationship with the practice platform, how familiar you are. Again, it's anonymous. Yeah, it's anonymous. It's just a little bit of fun and games. And I can see some honesty, and I can see many of you responding to this little quiz, little poll. And we've got a 90% response rate. There's always 1 or 2 people who are driving. There's always 1 or 2 people who don't respond. So let me end the poll there. Half of you describe yourself as logging into the practice platform once or twice. I'm so glad we're doing this session a couple of weeks before the exam and not a couple of days before the exam, because you still have the opportunity of joining that 37%. Well done, the 37% who've done SBR questions to time on the ACCA practice platform. That is the single best thing that you can do between now and the exam to best prepare you to pass the exam. Doing questions on the ACCA practice platform. It's the way to go. All right. And I appreciate the honesty of the 15% of you who said, what's the ACCA practice platform? I appreciate that. And you're here to learn, and I'm here to show you. But it's something that you've got to get very familiar with. And our third and our final poll for this Saturday afternoon is to find out your relationship with SBR? Are you a virgin? Is this your first time doing SBR? No right answer, no wrong answer. I'm just curious as to who I'm talking to. And there is a real clear, obvious winner. And the real clear, obvious winner is, that most of you are doing this for the first time. Brilliant. You've got to take it seriously, which you are doing by coming along today. There's a few of you who are doing this on a retread. And if you're doing it again a second time, one of the things you've got to say to yourself is, I've got to do something different from last time. And this presentation is different from last time because you've got to up your game slightly. You've got a base mark of marks on which you've achieved already, and then you've got to build. And we've got one or two people here who are coming along for the ride, being prepared, appreciating the fact that they're going to be doing the exam come next diet. All right. So most of us are coming to SBR for the first time. We've got some experience of the practice platform, but for me, not enough. But that can be dealt with. That can be dealt with partly today, partly in your own time. So thank you for your participation there. Thank you for your participation there. That's great. It's a cliche, but it's true that if you fail to prepare, you're preparing to fail. And this is true of being familiar with not only the syllabus, not only the material, not only the exam, but the precise way that the exam is tested. And it's tested in a computer-based environment. It's tested on the CBE platform. And we've got the opportunity of getting familiar with that. We've got to get familiar with the functionality. And so I'm going to do a little bit of a live demo in a minute, showing you that functionality and talking to you about some of the shortcuts and some of the good things that you can do, perhaps. So I'm going to do a new screen share. And my new screen share takes me to here. So like you, I log into the ACCA practice platform, and you can see the address there. And if you're not sure how to do this, go on YouTube. There are little videos there. Just search ACCA practice platform, how to log in. ACCA have got some really good basic, but I thought I would just take you through it. This is me, and this is where you want it to work. I'm looking at it from a candidate's point of view. And then you've got, and maybe this looks slightly different because I'm a tutor and I've self-assigned these things, but the exams that you've entered into, the papers that you're looking at are here. And, you can use the blank workspace. So you can practice just playing around with the blank workspace. You're going to be doing the international. You've got the official resources. You've got the practice exams, the specimen. There's so much there. And what I want to do is to resume looking at a particular question. And what I thought I'd do is I would look at the most recent exam, the March-June 2021 exam, and I would load that. Now, the information we've got here is the same information that you'll have in the exam. Effectively, I've now kick-started the exam, and you've got the navigation. And I don't want to look at question 1. I want to look at question 2. All right. Now, before I get going on this question, I just want to make you sort of familiar with some of the bits. If you want to, you can move this backwards and forwards if you want to. You've got here some information in the middle of the screen, which is worth reading very quickly, but only worth reading once, because it's a pretty boring scene setter. It is neither the requirement of the question, nor does it give you the information to answer the question. It's just a scene setter. You have to read it, but skim read it. We're a mining company, investors. Yeah, we've got exhibits because there's an impairment, there's Class A shares, there's blockchain, and the information to answer the requirements should be in your chosen response options. So you've got it here on the left-hand side, your 3 exhibits and your requirements, and then you've got a choice of response options, and this is different from the skill stage. So for me, the first thing that I do is I open up the requirements and I don't read them. I don't read the requirements. Life is too short. So I Control C, yeah, close down the requirement window, open up my Word response area. Yeah, open up my Word response area. Sorry about that. Open up my Word response area, which is blank, should be blank. Then I do Control V. Now what I've got here is then the requirement of the question, but the formatting has all been lost. And now I can begin to read the requirement of the question. Discuss with suitable calculations whether Bismuth should recognize an impairment loss. And of course, that's about Exhibit 1. Secondly, whether Class A shares and Class B shares should be classified as equity or debt. And I've got an exhibit there about Class A shares and Class B shares. And then Part C is dealing with the ethical issues relating to the blockchain. And there's the information about the blockchain and the ethical issues. It is 48 minutes to the hour. All right. I have 5 marks. 5 marks equals 8 minutes. If it is, well, it's 7:49. If it's 7:49, 7:50, it's 8:57. I should be finishing this answer when it's at 57 minutes past. All right, that's the game I'm playing. That's the game I'm playing. So I'm going to size my window. Yeah, I'm going to size my window. I'm not going to make it too big and I'm not going to make it too small. I'm going to put it over there. And then I'm going to open up this impairment information. And I'm going to read this information. I'm going to answer the question. Now, what is the question I'm being asked? Discuss with suitable calculations whether Bismuth should recognize an impairment loss for the mine. So it's about impairment losses. I'm doing this question. Bismuth owns mines which have a carrying amount of 200. If I'm doing an impairment review, very important, I know the carrying amount of the asset. They're going to decommission the mine. They've created a decommissioning provision of 53. So not only do we have a mine, which is an asset, but we have an obligation to remove the mine, and that's been measured at 53. The directors are unsure how the decommissioning will affect the impairment. So that's a very specific thing that they are not sure about. So presumably, I've got to answer that as part of my answer. And then we've got information about the cash inflows and the sale, yeah, what's coming in and then what's going out in terms of the operating costs and so on and so forth. I've got some numbers. Now I've got a decision to make about where I start. Do I start with the words or do I start with the numbers? I always start with the words because there are more marks available for the words. And if I'm going to start with the words, I'm going to start with the definition. What am I defining? Bismuth will recognize an impairment loss on the mines if the carrying value exceeds the recoverable amount. The loss will be charged to P&L. All right. So that's my definition, and I've softened it because I've referred to Bismuth as a company. All right. And that's it. Next thing is, if I'm going to do an impairment loss, I need the carrying value and I need the recoverable amount. And I need to explain that I've got an asset which is inseparable from the liability. So the carrying value of the asset of mine and the obligation to decommission cannot be separated. Cannot be separated. They are, in essence, a cash generating unit. So the carrying value of the asset and the carrying value of the liability will be looked at net, in other words. Now I've got to look at the recoverable amount. The recoverable amount is the higher of the fair value less cost to sell and the value in use. But in this question, there's no question of selling it. It's about the value in use. So the recoverable amount in this case will be an estimate of the future cash flows as discounted back, including the costs of disposal. It should be based on reliable estimates, something like that. All right, now you can see, that I have written three things. What I haven't yet done is to start dealing with the numbers. Now you've got a choice with the numbers as to how you present the numbers. One way of presenting the numbers would be to use the spreadsheet functionality. But here the numbers are very small, very simple. And you could therefore, I think, get away with a little bit of a table where you do the impairment review. And if you're doing the impairment review, then we want the carrying value, and we've got the carrying value of the asset, 200. But at the same time, the carrying value of the liability should be in there as well. And then the carrying value of the liability is 53. Now, maybe thinking ahead, that might be better. We drop the numbers in there instead, so that we buy ourselves, we buy ourselves a little bit of space. So I don't need a calculator or a spreadsheet to know that is 147. I'm now looking at the recoverable amount, and the recoverable amount, there will be some money coming in. What is coming in? The inflows are from the sale of the components are 20. The inflows from the sale of the mining output is 203. And unfortunately, there are outflows because we have to run the operation, and running the operation is running it at 48. And then we also have the challenge of decommissioning it, which is 53. Now, this is where I might need a calculator to add those numbers up. So let me get my calculator together here. My calculator is not playing ball with me. Why is my calculator not moving for me? I don't know. Here we go. So in my calculator, don't like the scientific, make it standard. What am I doing here? I'm taking 20, and then I'm adding on 203, and then I'm taking away 48, and then I'm taking away 53, and this is giving me a figure of 122. If I then put in 122, I don't need a calculator for 147 and 122. I therefore have a loss of 25. Therefore, I have a loss of 25. I'm just thinking about tidying this up a little bit. Maybe I shouldn't bother. So there are 3 columns there that maybe I can simply get rid of those columns, delete those columns, and it's looking a little bit neater. What's the time? It's 57 minutes past. Time out. Time out. I'm stopping here. I have done what you should do. I haven't read in detail part B of the question or part C of the question. I've done one thing at a time. And I've structured my answer, and I've made the length of my answer around the fact that it's worth 5 marks for 8 minutes. I made a judgment call that the majority of the marks were for the words, 3, and I made a judgment call that there were 2 marks available for the numbers. I started with a definition, but I didn't just regurgitate the definition. I used the name bismuth. I'm discussing. I'm talking about the carrying value. The spelling is bad. If I had time, I'd go back and I'd tidy it up slightly. Yeah, I'd tidy it up slightly. But life is too short. I haven't used the word CGU. I've said cash generating unit. I haven't had to refer to ISA 36. There are no marks available for stating the name of the number of the accounting standard. Let me tell you, let me assure you, let me promise you, this answer here is worth 5 marks. This answer here is worth 5 out of 5. It is done in the time allowed. I know the examiner's answer is better. I know I can produce a better answer. Not in 8 minutes. Not under pressure. Not doing it first time. This is it. This is achievable. This is what you've got to do. Yes, you can write SOPL and SOFP instead of that. You saw me say this loss will be charged to P&L. That's fine. That's a very, very well-known abbreviation. Now I'm pausing here for a moment in case you've got any reaction to this. I want you to pass this exam. It is achievable to pass this exam. It is not achievable to produce an answer of the quality and the depth of the examiner's answer. Do we need to say how much to pro rata for CGU, says David? Wasn't in the requirement of the question. The requirement of the question was about bismuth. And so I'm answering about bismuth, and I'm answering about the mines. And there's no suggestion within the question that there's a need to pro rata. There's no goodwill in the question. So I shouldn't be writing about how NCI, I have to answer the question. And that's why we read the question. And that's why we get the marks for answering the question. You can get the full marks without mentioning the standard. Correct. Correct. I mean, you know, if I was a bit more polished, if I didn't have 8 minutes to do it, I had 12, 15 minutes to do it. Bismarck will recognize an impairment loss, yeah, in accordance with the standard on impairment, yeah, you know, on the account exceeds the recoverable amount, which is that I just didn't have the time. I wanted to get on with it. So you don't need to quote the full stand. Do we need to conclude? I think this is a 5-mark exercise. We've identified here the impairment loss, and the impairment loss is 25. And we've said already up here that the impairment loss will be charged to P&L. Yeah, so I don't think in this particular context, we do have to conclude. But I like the question, because normally, as we'll see in a later slide, if you can start with a definition, application, 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 and you finish with a conclusion, that's a very solid way of approaching. That's a very solid way of dealing with it. So thank you for that question. Now, I haven't quite finished, because I do want to show you that it would have been perfectly acceptable, it would have been good practice if instead of showing your answer in a table form, instead of doing the table, if you had done your answer in the spreadsheet, using the spreadsheet functionality. It's not Excel. It's not Excel. It's not Excel. It doesn't have the same functionality. Yeah. So, you know, you would do your little workings over here. Yeah, this is how you'd lay it out, and you can see there that, you know, when it comes to working out the 1, 2, 2, that I've, you know, programmed in the cell boxes to get the information, and that's fine. What you would ideally also show is a little bit of a reference there. So do we need to show calculation shown in the spreadsheet? Yes, you do, because look, I've just written it there. Can you see? I've just written it there. Yeah, see, yeah, see spreadsheet for working 1, see spreadsheet for the calculation. David says, can we copy the spreadsheet working and paste it in the word processor? Yes. But why? Why? Because the marker's going to look at the word, the spreadsheet. I mean, you know, you can do that. Control C, but oh, then the formatting's lost. Oh, what am I doing? You've got to make these mistakes yourself, right? Do not bother trying to copy, cut and paste between the spreadsheet and the word processor. Life is too short. It's an unnecessary thing to do. The marker is going to be able to look at the spreadsheet. If you use the spreadsheet, you're using the spreadsheet. Yeah, only use the spreadsheet for word numbers. Only use the spreadsheet. Only use the spreadsheet for numbers. Don't take the opportunity of writing in here, yeah, the recoverable amount is, yeah, don't do that. Don't do that. Don't do that. Don't do that. In doing it in a spreadsheet, are the cosmetics, are the borders, alignment matters? You could spend a long time making things pretty. You know, you could spend a long time faffing around, improving the presentation. Life is too short. If you've done questions to time, You just haven't got the time to faff around with the nice little thing. Yeah. And Sarah asks, is it okay that we leave the question copied in the word processor? Absolutely, it is okay. You're just going to waste a few seconds deleting it. You don't need to delete it. It's up there. It's up there, you know, and if you want to put it in bold so that you're reminded that it's not part of your answer and that's what you're answering, that's fine. That's fine. By the way, this is something I never do. I never use the scratch pad. It's an absolute waste of time at the strategic professional stage because the marker never sees the scratch pad. The examiner never sees the scratch pad. Anything you write on the scratch pad is invisible. So what you can do, I suppose, is you know, put something in the scratch pad. Oh, and then you would have to Control C, close it down, drop it in, Control V. Oh, no. Life is too short. Do not use the scratch pad. Do not keep the requirement of the question open because it's just another window to pollute your screen with. Control, copy, paste, take it across there. I'm happy, Yip Long, I'm happy to use P&L. I think if you're explaining to somebody about impairment and you start, talk to your brother, talk to your sister, talk to your mother or your father and say, when an asset is impaired, we're testing it on the level of a CGU. They won't understand what a CGU is. So don't use abbreviations for technical terms. Cash generating unit. If you're just in the spreadsheet, if you're just in numbers, yes, you can get away with abbreviations. But if you're writing, first time round, you should say CGU recoverable amount. You see, if you say imp loss is where carrying value is greater than recoverable amount, and recoverable amount is higher. It's jargon. I don't like this. I don't like this. Yeah, this is not the right thing to do because you're not communicating with somebody. Yeah, you're not communicating in a clear and efficient way. All right. So I hope that's useful. I hope that's useful. I want to do another part of a question again as an exercise of doing it to time. Yes, that's fine, Indrada. Absolutely, you're correct in what you say. So I want to have a look at the next part of the question. I was perfectly able to answer the first requirement looking at the first exhibit. I didn't need to read the second exhibit and the third exhibit because my head would then just be too full. So I'm now thinking that I want to have a go at part B. And when I look at part B, again, I'm seeing 5 marks. If I'm seeing 5 marks, I'm thinking it's worth 8 minutes. And I'm thinking it's now 10 past. So I'm now thinking it's 18 minutes past the hour that I've got to stop. All right. That's the game I'm playing with you. That's the game I'm playing with myself, showing you what is achievable. Now, the requirement of the question is to discuss whether the Class A shares and the Class B shares should be classified as either equity or liability. 5 marks. I think my answer is going to involve a definition, because I ought to say what is debt and what is equity. I also think I need to come to a conclusion, an application about the Class A shares. And I think I want to come to a conclusion and a discussion around the Class B shares. So thinking about the planning of my answer, that's the structure that I'm going to operate. Bismuth has issued 2 classes of shares. Now, without being too cynical about it, one will be debt and one will be equity. That's the way it works, isn't it? Yeah. Now, in exchange for cryptocurrency, oh God, Bitcoin. Both of the shareholders require the permit holder to vote and give an entitlement to rewards. Yeah, there's an entitlement to rewards. They have discretion over whether the awards are payable. So rewards are something which are variable. I've got control over them. Sounds a little bit like, well, anyway, we'll come back to that. Bitcoin can be readily convertible into cash. So Bitcoin is an annoying distraction here. So what do I know about the Class A shares? I know the Class A shares are redeemable at par in the event of them getting a listing, and that listing is highly probable. And then I've got some information about, do I pay them back in cash or I pay them back in shares and Bitcoins are cash, and it all gets a bit confusing and I'm getting a headache. Bismuth will classify the instruments as debt or equity in accordance with substance. Debt is where there is an obligation to pay back in cash or other financial assets. Equity is where there is evidence of ownership in the assets after the debts are paid. Now, there's something annoying in this question, which is the Bitcoin. It's to me, it's a distractor. It's not really about Bitcoin. The problem with Bitcoin is it's readily convertible into cash. So I'm just going to deal with it here. Bitcoin is in, let me cheat, Control C. Bitcoin can be readily convertible into cash, and so in substance is cash. Now I'm going to think about my Class A shares. What do I think about my Class A shares? It's highly probable I'm going to redeem them because it's highly probable they're going to, the shares are going to be issued, the floating is going to take place, but they've got rewards, and these feel like dividends. So rewards feel like dividends as they are variable and at the discretion of Bismuth. This suggests debt. However, it is highly probable, is that the right word? Yeah, highly probable the company will list and then have to redeem the shares. And, you know, on that basis, I've got conflicting information. I've got a judgment to make. And on that basis, I think because it's highly probable I'm going to pay the money back, I'm going to redeem it, I think it's going to be debt. In conclusion, Class A shares are debt. Yeah, our liabilities are debt. All right. Now that means we can say here, in conclusion, Class B are equity, just because I'm just being foolish. I'm mucking about, yeah? Well, why? Let's have a look. What do we know about Class B shares? They are not compelled to redeem Class B shares. There we are. There we are. You know, we can say bismuth is not compelled to, but actually I should read the question a little bit more, but I'm a bit jittery on time. They do contain an option, but we have the option. We don't have to exercise the option. And if we fail to do so, we just have to pay bigger dividends. We don't actually have, it's not compelled to, and I've almost run out of time. Bismuth is not required to condemn if it does not exercise the option. Then all that happens is bigger dividends, brackets, rewards. And if I really wanted to be a little bit nicer in terms of my presentation, and if I really wanted to highlight something to you, it would be the structure of my answer, yeah, because I have, yeah, broken the answer down. And now, according to my clock, yeah, it is 18 minutes past. This is as good as it gets if you want to stick to time. Are there any issues in copying directly the wordings from the question and using it in our requirement? I've done it very, very selectively. You're clearly, if you start cutting and pasting whole chunks in, you're not adding any value. All right. So be selective. Be selective. Have I said that? Oh, I've made a technical mistake. I've made a technical mistake. Yeah, absolutely. Absolutely correct. This suggests so you can see the word however. I was yeah. So variable dividends, rewards, variable rewards. Thank you very much, David. Variable rewards. Sorry, I confused myself in the adrenaline and the excitement. Variable implies equity, doesn't it? If you're debt, it's fixed what you're going to get. And in this case, it's variable what they're going to get. And that variability in what they're going to get in terms of the rewards, the dividends, suggest equity. Yeah, sorry, that was me just having thick fingers. Thank you for pointing that out. I'm glad that that wasn't left lying around. So yeah, there you go. There's my answer. It's not worth 5 out of 5, is it? Because it originally had that mistake in it. I don't know, 4 out of 5. You could get picky about, I've missed something else out as well if you really wanted to, but I'm comfortable that now my answer is worth 5 out of 5, and maybe what I did in the time was only worth 4 out of 5. I repeat, it's shorter than the examiner's answer, but anyone who's done these sorts of things to time knows, and anyone who's passed a strategic professional exam knows that the answer they actually produce in an exam conditions isn't of the same isn't of the same depth and quality that the examiner does. So the examiner gives us a good answer so we can learn from it, not so we can copy it. That we can be inspired by it. You know, you watch the Olympics, hey, you know, they're running, they're jumping, they're swimming, and that inspires us. But I don't swim as fast as the swimmers. I don't run as fast as the runners, but they inspire me and I learn from watching them. But it's not something that I can reproduce. We want a pass, not a gold medal. We want 50%, not a gold medal. So I am pausing here because this is the end, or this is my first little bit, and I've been focusing on making sure that you can see examination technique in practice, managing it to time, using the practice platform, editing, presentation, the functionality, not stressing out about spelling mistakes, being able to go back and change things slightly. I'm pausing for 1 minute in case there are any observations or questions you want to put in the group chat around. Can we answer the whole question in the spreadsheet? No, no, no. You do not answer the whole question in the spreadsheet. No, no, that's terrible. The examiner has said time and time again not to do that, Priscilla. So now you know. If there are numbers, you put numbers in the spreadsheet, but you put words in the word processing. That's one of the things, the difference between skills and strategic professional. At the strategic professional stage, you've got to make that judgment decision so you can get it wrong. Please put words in the word processor, numbers in the spreadsheet, but if it's a very simple number, you can get away with doing it. If it's quicker for you, if it's quicker for you to do a table with a small calculation. If it's a big calculation, obviously do it in the Excel, in the spreadsheet function. Thank you for your question, Priscilla. This is why we're here. We're here to learn. We're here to ask questions. It's a safe environment. Yeah, I'm just passionate to make sure that we're on the right track. Every journey starts with a small step. It's a challenge, but you do one thing at a time. And I just want to momentarily reflect on some of the things that you saw me do. I RTQ, I read the question, but I read the requirement before the exhibits. And in fact, I only read one requirement. I realized that the one requirement related to the one exhibit, the one requirement related to the one exhibit. I didn't read all of the exhibits before I started. I read the requirement, related it to the relevant exhibit, kept them separate. Z, I'll come back and deal with that later. Let me just deal with what, you know, that's a general question. That's a general question. Yeah. Let me come back. Sorry. For environmental provision, yes, okay, Z, let me deal with that question now, because that specifically relates to what we've just been talking about. So when you are recognizing a decommissioning provision, you're recognizing a liability, correct? And you're capitalizing it, correct? So you're debiting the asset, Z, you're debiting the asset, and you're recognizing a liability. So if you've got a mine, which is 100, if the cost of buying the mine is 100, but the cost of decommissioning it is 50, you recognize the liability of 50, and then you add that 50 onto the 100. So now your mine is 150, and your liability is 50. And therefore the net cost is 100, because the 50 and the 50 are the same. So that's all we did. Does that make sense? You can't get rid of the one, you can't test the 150 without thinking about the 50. They're conjoined. They're together. Is that okay? Brilliant. Okay. All right. Let me carry on. So we read the question. Yeah. We understood that the majority of the marks were available for words, not numbers. And it's for that reason that I started with the words, not with the numbers. All right. Now you're adults, you can choose your own path if you want to, but my advice is to go with the majority of the marks, and the majority of the marks are for the words, so you write. And there was a reason why things were said in the question. The directors didn't understand how the provision was going to be dealt with in the impairment, which is why we then had to say that it was inseparable, which is why we linked it to the asset to explain that. And it's this business of understanding why you're told information. I wonder who's going to be fastest on the draw. Yeah, how many have we got? We've got 178 people. Which accounting issue is at stake when the asset is damaged? Now, you've given me the number of the standard. It's better to say impairment. Thank you. Thank you. Thank you, Phoebe. Thank you, Husseini. Yeah, thank you. Yeah, brilliant. Well done. If an asset is damaged, thank you, Irene. If an asset is damaged, that's a classic indicator of impairment. So you do an impairment review. Now, we're weeks away from the exam. We're days away from the exam. You've been studying SBR, and you would have studied the chapter on impairment, but there would have been other chapters, there would have been other topics, there would have been other lectures where impairment came up. So if we've got an asset that is damaged, if a client comes to you and says, my asset is damaged, and you say, okay, let's discuss the accounting consequences of that damage. One of them is there's a loss that you charge to the P&L. Can you think of anything else? Having charged that loss, thank you, brilliant. Yeah, deferred tax, I love it. Yeah. So, you know, looking at if there's a number of marks available, you've got to think outside the box, because there is a further implication. Is there anything else, any other lectures that you've dealt with where impairment crops up? Apart from cash flow, thank you. How brilliant is that? Yeah, they're the two that I've got as well. Because if an asset is impaired, the impairment loss is not a cash flow. So it's added back in the cash flow statement when you're reconciling operating profit to cash generated from operating activities. It's added back. So it's not a cash flow. And it's a deductible temporary difference, because the carrying value of the asset comes down. It's ignored for taxation purposes, so the tax base remains the same. So you've got a temporary difference between the tax base of the asset and the carrying value. You've got a deductible temporary difference, and so you've got a deferred tax asset. And so, you know, it might be that the question leads you into those ideas, but make sure you're always answering the question. Well done. Now, if you've been following me on LinkedIn, you might have seen one of my poll questions where I sort of tease my LinkedIn followers with questions that help them think about how IFRSs are applied. So what's the accounting issue here, or issues? What's the accounting issue here? The company has guaranteed a loan that's been taken out by the director. Oh, lovely, 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 lovely. There's an avalanche of related parties. Absolutely fantastic. This is a related party transaction because the director is a related party to the company. So even though the guarantee is not a transaction that involves money, even though the guarantee is not a money transaction, it is still a transaction with a related party, it therefore must be disclosed in the notes of the accounts. So fantastic. Would you recognize a liability? Would you recognize a provision? Would you recognize a provision? Yeah, you recognize a provision if 3 conditions are met. What's your judgment here? Yeah, Hussein. Yes, I agree. I think we're looking at a contingent liability, aren't we? Because unless it's probable the director's going to default, unless it's probable the director's going to default, the company won't be paying any money out. It's possible the director could default, and if the director defaulted, then we would have to pay the money out. But I think realistically, it's reasonable to assume that it's only possible. Therefore, a disclosure would be made in the notes. But you've got the disclosure anyway in relation to the related party. It's not a big issue. Definitely a related party transaction, even though no money changes hands, because it relates to a director who are always related parties, as indeed are their members of their immediate family. Under ISA 37, it's no provision being made, but you would make a disclosure in the notes as a contingent liability. Would you recognize a liability? Yes or no? Would you recognize a liability? Yes or no? I've still got a third accounting standard to play with here, and it's IFRS 9 financial instruments. Would you recognize a liability here? Yes or no? It's not about being probable. No, I'm switching. I've done my story about ISA 37. I've done my story about ISA 37. And oh, I need to pause here. Can we take a time out for a sec? Because everyone is giving me the wrong answer. And I need to justify why you would make a liability. So just take a time out here for a sec. Under ISA 37, it's an all or nothing approach. If there's a 40% chance of default, you recognize no liability. If there's a 60% liability of default, you recognize all the liability. So under ISA 37, it's an all or nothing approach. Now, what you may or may not know, but I'm going to tell you now anyway, is that if you're giving a guarantee, it's a financial instrument. It's a contract that creates a financial asset in one entity and a financial liability or equity instrument in another. So the giving of the guarantee creates for the company an obligation, a liability. Now, under IFRS 9 financial instruments, initial recognition is not all or nothing. It's at fair value. So if the guarantee is 100 million and there's a 1% chance of default, you would recognize the liability at 1 million. I'm going to say that again. Financial instruments are recognized at fair value. So you would try and reliably estimate the fair value of the guarantee, the amount that you would have to pay to have that obligation removed from you. So it's a small point, but the point is you pick the low-hanging fruit first, you deal with related parties, then you think about provisions, then you think about the trick. And if you don't get the trick, don't beat yourself up. You don't have to get 10 out of 10 to pass the exam. You have to write something back. And by the way, I did earlier see ethics being thrown up there. It went very, very quickly. And I like the fact that we brought up ethics because what's the company doing guaranteeing loans that have been taken out by the director? I mean, it's just crazy. It's not really in the best interest of the company. That strikes me as being unethical behavior. If the question has given us an accounting treatment, it's probably going to be wrong. If the question has given us an accounting treatment, the answer is never going to be, I agree with the accounting treatment given, everything is correct, there is no ethical issue or dimension to this question. So if it's in question 2 and an accounting treatment has been adopted, it's probably wrong. Because it's probably wrong, the ethical angle there is competence. If they've made a genuine mistake, there's a competence issue. If you think that they have deliberately done it to get a bonus because there's some kind of conflict of interest, there's some kind of threat, then objectivity kicks in as well as integrity. But make sure you explain why the ethical issue has arisen and make sure you justify the correct approach. One of the things that you will often be asked, always asked in the exam, is from a shareholder perspective. What do shareholders care about? What a shareholder, when they're looking at a set of accounts, yes, their dividends, yeah, their return. What else are they interested in? How else? There's 2 ways they get a return. 2 ways they get a return. Yeah, one is dividend, share price. Thank you, Raymond. Yeah. When you think about a shareholder, what do they want? Oh, Mohammed, I love you. Yeah, sophisticated. Yeah, you're dealing with it. I'm dealing with the crude stuff first. Yeah, I'm dealing with the crude stuff first. I'm dealing with the easy stuff first. A shareholder is interested in profit because it affects the share price. Yeah. Profitable companies, there is a correlation, direct correlation. The more profit you make because of the present value, the future cash flow, all that kind of stuff, the dividend valuation model, the whole idea, profitable companies should be worth more. And shareholders are interested in dividends. So it's the return. And they either get a return by the share price going up or by getting the dividend. And both of those really require profit, because to pay a dividend, you need a profit, and you also need cash as well. So if you think about a transaction, an impairment loss may reduce the profit, but if you've got sufficient retained earnings, you can still pay the dividend, because actually there's no cash outflow that's occurred because of the impairment loss. Shareholders might be interested in going concern if they're worried the business might fail. And as Mohammed correctly pointed out, sustainability, key issue, sustainability. More and more, investors are sophisticated. More and more investors are thinking about the future. Will this business still be here in 5 years' time, 10 years' time? Is this business going to be able to adapt to the brave new world? Good. The number one takeaway from the live session I did this morning is that you base the amount of time you spend on answering the question on the number of marks available, and the length of your answer is based on the marks. And you try and make 1 mark per valid point. You saw I identified 3 marks for the number, for the words on the impairment, and therefore I came up with 3 points. Yeah. Don't do this. Don't do this. Don't do this. Don't make the question fit your answer. Don't try and make the question fit to something that you've learned. You have got to make the answer fit the question. Don't go into an exam with a preconceived essay in your head. Yeah, previous answer from a past question learned. Don't do that, because you're never going to get the same question. These are professional exams. It's not like the degree. It's not like at university. The exams will be unique, will be challenging. That's why the qualification is so valuable. Plan your answer. You saw me give a definition. I soften that definition, soften it. You saw me discuss, apply, conclude. That's a very classic way of answering the question. And then you can always edit your answer, you know, for the Bitcoin bit, tidy it up a little bit. You don't need to quote the name of the accounting standard, but plan your answer and use the plan so it just incorporates into your answer. Time management is key. Time management is essential. If you had 4 hours, 5 hours, 6 hours to do this exam, you'd virtually all pass. You've soaked up in your head so much knowledge. And the challenge you have is to get that information out of your head as quickly as possible within the time allowed. Because you've got to read the information quickly, you've got to judge it, you've got to scan it, you've got to be aggressive. Because if you spend too long reading and not understanding it, you run out of time. Judgment. Sophia, judgment. Look at past questions, then go back and look at the marking guide. So look at past questions, estimate how you think the marks should be broken down in your head, because you've broken down the requirement, then go back and have a look at the marking guide and live and learn. Obviously in the real exam, there won't be a marking guide, but you've got to get used to that. That's a skill that you'll need. And if you get that skill for SBR, it'll help you with SBL. It'll help you with AAA. I want you to be the marker. I want you to be the marker. This is an answer. This is a student answer. Hand it in. Please don't tell me it's worth 5, and please don't tell me it's worth 0. But I'm curious what you think it's worth. Thank you, Phoebe. Thank you, Geraldine. Thank you, Adeline. Thank you, Farah. Thank you, David, Fatan. Oh, lots of people having a pop. And by far and away, the most popular answer is 2. And I would give it 2 as well. I'll give it 1 for the numbers, which are wrong. The numbers are wrong. The impairment loss is not 78. The impairment loss is 25. The numbers are wrong. I'll still give it 1 mark. And I'll also give it a mark for that opening definition, because it's been softened. Because it refers to bismuth. It's just been softened a little bit. But overall, it's not, it's, you know, 40%, isn't it? 2 out of 5. What about this one? What about this one? Needs a read. 3, 2, 1, 3, 3, 3, 2, 3, 3, 3, 33. Somebody's got fat fingers like me. If you're giving it 3, yeah, you can't give it more than 3 because there's no calculations, as Mohammed has correctly pointed out. So you can't give it more than 3. If you're giving it 3, you're presumably giving 1 mark for each paragraph. First paragraph, business mind is impaired when the carrying value exceeds the recoverable amount. Yes, I would give it a mark. I'll give that a mark. The provision for decommissioning the mine is a liability. With the standard, all 3 conditions have been met. The past event is the construction of the mine. This is what causes the obligation. It will be recognized at the present value. And the next paragraph, it's a non-cash expense. It's added back in the cash flow. It will reduce the carrying value, but not the tax base. My sister is a granny, which means that my nephew is a father, which means that I'm a great uncle to a 2-year-old boy who lives 5 houses away from me. And he's just learning to speak. His name is Louis. And he can say, my name is Louis. And he can say, I am 2 years old. And I saw him the other day and I said, hi, Louis. No, I said, hi, Louis. How old are you? And he said, my name is Louis. How many marks should I give him? I didn't give him any marks, did I? What he said was correct, but it wasn't answering the question. The second paragraph here and the third paragraph here are technically correct, but as has been pointed out, it's not applied. It's not answering the question. The person who wrote paragraph 2 and the person who wrote paragraph 3 has learnt it, read the book, got the book in their head, copied it out of the book, copied it out of their head. Yeah, this answer's worth 1. And the mark was earned in the first paragraph, not the second or the third. Yeah, that's what I mean when I say rote learning won't get you through. That's what I mean when I say that we've got to have application. This is good. There are 5 marks and there's 5 sentences. There's 5 points being made. This is good. Is it? How many marks? Don't just say hosts and panelists. Everyone, please. Everyone. Yeah, if you're gonna put a comment, put it on everyone. Some say, oh, 1.5. Hey, you can't give half marks. Who's ever heard of an ACCA student getting 49.5? Never heard of it. Yeah. Some say not -1. Oh, that's harsh. We don't have minus marks. Yeah, not like Louis. Yeah. Okay, so there's a range of responses coming here. Winnie says 1. Sylvia says 1. Anis says 1. Quite a few are saying 0. Cryptocurrency is a current issue. The value of cryptocurrencies can go up and down. The question was about whether Class A and Class B shares should be debt or equity. Not sure that that's relevant. Bitcoins can be inventory if they're stock, but they're normally intangible assets. That's true. It's not answering the question, is it? It is important that the classification is done correctly, otherwise the gearing is wrong. That is very true. That's quite perceptive. And the conclusions are correct. Class A was debt and Class B was equity. But where's the justification? Where's the explanation? I think a better question is, what's the feedback? What if you were the lecturer and a student handed this as their answer, you would say to the student, make sure you answer the question properly. You haven't given the definition of what is debt and what is equity. You haven't, and you would get marks for doing that. And although you've come to a conclusion, you haven't justified why you've come to that conclusion. Yeah, exactly. I agree, Indra. I agree. So I think the mark, I don't know. I chop and change my mind on this one. Sometimes I want to give it 1 mark for encouragement. Sometimes I want to give it 1 mark to say, well, look, well done, you've had a go. That's good. But I think if I think I was in an exam scenario, I'd give it 0. But if I was marking your script as a homework, I might say 1 out of 5. Well done, you gave it a go. So yeah, maybe it's half a mark, but half marks don't exist. Right, we're coming up to a break in a minute because my voice is tired. If you were to justify, you could still get marks. Yes, you could still get marks for coming up with the wrong answer, but having a valid debate. But Chuchin, make your questions, change it to everyone, please, or I won't answer your questions or comment on your questions. I want everyone to be able to see. So change your setting, please. No bananas, no bananas, no mango, no oranges. The only fruit is apple. Application, application, application. That's what you need to do. Application, application, application. All right. What happens is that after the results come out, I talk to a lot of students. I listen to a lot of students. And those students who failed have regrets. And one of their regrets is this: they don't get the difference between the two. During the tuition phase, you are absorbing information in, getting information into your head. But it's not tuition anymore. It's revision. You should now be squeezing your brain, getting quicker at getting the answer out of your head, getting quicker at thinking, reading, applying. Yeah, thinking, reading, applying. That's what you're going to get better at, answering the question, squeezing it out. There's no point in putting more knowledge in your head. Your head's full of it already. The thing that's limiting you in potentially passing this exam is time. So you've got to get quicker at getting the information out of your head. We're going to take a break in a minute. Yeah, I just need another cup of tea. I need to give my voice a rest. We've been going for an hour. We've been going for an hour and a half. So it's wholly appropriate we take a break at this stage. So I'm going to disappear. I will come back. I will come back at 5 past the hour and we will resume. And in the meantime, yeah, stand up. Go and get a cup of tea yourself. All right. Find me on LinkedIn. Connect with me on LinkedIn. Find me on Spotify. Find me on Google Podcasts. Find me on Apple Podcasts. There are free resources out there that can help you. Yeah, because you've got to practice question after question after question, but you can find some little tips and hints on LinkedIn. You can find some little tips and hints on, yeah, my free podcast. But for now, I was fortunate enough to have a meeting with some of the ACCA examiners team at the recent Global Learning Providers Conference. And I was struck by an emphasis that the examining team placed upon current issues. And there are a number of current issues out there. Cryptocurrencies, crowdfunding, accounting for COVID, the consequences of COVID, but also the one that was discussed was accounting or being aware of the issues around sustainability, corporate social responsibility. And I just wanted to spend a few minutes making sure that you are comfortable with what this issue is and how it might be examined, and you've got to be able to write something about it, because you're not going to be asked to prepare a report, you're not going to be asked to interpret a report, but it's about the regulation and so on and so forth. So sustainability, for the avoidance of any doubt, is about making sure that the world can continue. One of the current debates around sustainability, which is relevant for you to be aware of, is whether or not they should be mandatory or whether they should be optional. In other words, whether they should be regulated. And at the moment, we have no regulation. At the moment, you are not required to do a sustainability report, and there are some advantages to that. For example, it means if you do produce a sustainability report, it's you own it. There's almost a competition out there to produce the best one, because there's no benchmark. It's the Wild West. So it's tailor-made, it's specific to the organization. Yeah. But the fact that there is no regulation really means that there's a vacuum. A lot of people don't produce them, so users can't make comparisons. And actually, we want to move the debate forward so there is more sustainability reporting. So the disadvantages, I think the advantages, I think we need sustainability reports, because only then do we have compliance, only then do we have comparability, only then do we begin to satisfy the information needs of users. If we do have regulation, though, there is a risk it becomes a tick box approach. There is a risk that people see it as another compliance, as another issue. So be prepared to debate the pros and the cons of whether sustainability reports, climate reports, whether there should be regulation. I think it's coming. Well, I know it's coming. Yeah, I know it's coming. And I think the conclusion, if you want my conclusion, is that the users want the information, and only when you have a regulatory framework do you get something which is comparable and consistent, and there's public trust. It's coming. It's coming. Yeah, it's coming. So what are the benefits of having a business report on sustainability? And I suppose it's a question of who you're talking about, who is benefiting. And the traditional way of thinking about it is from the stakeholders' point of view, from the investors' point of view. So why do the investors benefit? Because at the moment, they're blind. All we produce at the moment, well, okay, integrated reporting, fantastic. Let's put that to one side. But the traditional regulatory approach is that you produce last year's profits, last year's balance sheet, last year's cash flow. It's backward looking, it's financially driven, it's short term, and investors want more information about the future. So there is a gap between what is reported and what users want to know. There is a gap between what we tell them and what they want to hear. That's the reporting gap, not the expectation gap, but the reporting gap. So the reason, the benefits for investors is that they will learn more about the company. It will de-risk their investment. They will now know that the company has a sustainability policy. They will know the company is going to continue. They will know the company will be green. They will know more information about, about the company. Now, the company itself also benefits from sustainability reports, because if investors are more likely to buy shares in the company because it's their investment is being de-risked, if the investor's investment has got a lower risk, that actually means they're more likely to buy the shares, which increases the share price because they know more about the company, and therefore the cost of equity comes down. It lowers the cost of capital. So it pays to be good. Ah, David, you come up with my third point. Second point is it helps staff. I think if you want morale to be high and you think of your staff as key stakeholders, they want to work for a good company that pays his taxes, that isn't being fined, that's one of the good guys, not one of the bad guys. It's also to do with customers. Yeah, the consumer preferring an environmentally friendly product. And sometimes it's even a precondition of winning customer contracts. If you're contracting with the European Union, if you're contracting with another ethical company, they will pass their values down the supply chain and say, no, you can't use dirty coal. No, you can't exploit child labor. No, you've got to recycle what you're doing here, because if you're making a product for us, we need our values passed down the supply chain. So it increasingly is going to become a precondition of winning customer contracts, whether that's an individual consumer or whether that's a major player. All right, so there are benefits. Now there are challenges. At the moment, there's an absence of regulation. And because there's an absence of regulation, what form does it take? I don't know. Yeah, it will take different forms. So there's a lack of comparability. And I think there is a risk of TMI. What does TMI stand for? Anybody? Thank you. Too much information. Got a P&L, got a balance sheet, got a cash flow, you've got directors' reports, you've got notes to the accounts, you've got an integrated report, you've got interim. I mean, if you pick up a real life set of accounts, instead of flicking it through the website, I mean, it's like 100 pages long, 100 pages long. We're saying, well, let's give them more. Will that really add value? Will they read it? Will they understand it? Or are they just going to get a headache? So there is a challenge. There is a risk that people switch off because we give them TMI, too much information. There is a risk that it's a cut and paste. This is known as boilerplating. There's a risk that, standard set phrases are just copy and lifted, dropped into a report. They're sort of vacuous. That's called boilerplating. And there's a risk of greenwashing. Ooh. Greenwashing. I wonder if you're familiar with that phrase. Greenwashing is bad. Greenwashing is being a hypocrite. Greenwashing is saying that you're not a racist when you really are a racist. Greenwashing is saying one thing and doing another. Oh, we're producing a report. Oh yeah, we're wonderful. You read the report and you think an oil company or a coal company are just wonderful. They're saving the planet. But actually, maybe they're consuming scarce resources. And if the top of the organization says, let's produce a sustainability report, but it's not embedded in the culture, it's not embedded in the business model, and you create a conflict between what you're publicly saying and claiming your policies are and the economic reality on the ground, that's known as greenwashing. Yeah, you're whitewashing. That's where it's come from. You're whitewashing. You're papering over the cracks. You're in denial. You're lying. It's if the reason for doing a sustainability report is PR, you're missing the point. It's about reporting on a fundamental shift of cultural behavior. And then there'll be a backlash. Because if it's a greenwashing exercise, ultimately the truth outs. There was a case in the UK about 2 months ago, Amazon. And Amazon have a lot of, they've been doing an advertising campaign recently in the UK about how environmentally friendly they are. And there's a picture of a woman, an engineer on the roof, and they've all got these solar panels, and their factories are all very kind of, eco-friendly because they're not using electricity, all this kind of stuff. And their lorries all run on reusable diesel, plant diesel instead of stuff. And then they were caught out because if you were sending stuff back to Amazon, instead of them recycling it, they were just dumping it in landfill. It was more cost effective for them in the short term, in the narrow short term. If somebody sent back a TV, they just threw it away. They didn't recycle it. They didn't resell it. And it was a big scandal in the UK for 24 hours. So companies have got to, if you talk the talk, you've got to walk the walk. If you talk the talk, you've got to walk the walk. Otherwise, it's greenwashing. Otherwise, you're a hypocrite. Otherwise, you're going to be found out. Maybe not tomorrow, but eventually organizations which claim to be good for the environment, which are destroying the environment, yeah, it's not good. It's not good. There is a demand for information. There is a demand for information. What arrangements are in place? How are you monitoring your carbon footprint? How does this relate to your business model? What is your business model? What arrangements are in place? Yeah. And what's the effect that this is going to have on the company's profitability? It might increase the profitability, might reduce it. Let's be honest, let's be open, let's be transparent. There might be certain assets which you have to impair. You might have to increase your spending on R&D because of climate change, because of sustainability issues. Businesses are going to have to think. Businesses are going to have to change. COVID has had a dramatic impact on tourism. And climate change can also have a dramatic impact on tourism. What's going to happen down the line? Let's have a think, let's have a discussion. Yeah, if you're involved in the mining industries, again, it's going to have an impact. There are opportunities out there for building wind farms. There's opportunities out there for recycling. But there's also a change in the market. What are the risks? What are the opportunities? How are you dealing with it? That's what the sort of thing that investors want to know. Now, where did I get the information to write those last couple of slides? Where did I get this information? I didn't write this. Well, I did write it in a way. But the information here is found very, very easily. Thank you, Rama. It's in this ACCA website. And you know, if I go on to the ACCA website, which I can do, we were looking at the you go on to the technical articles page. Yeah, you've got information about interpreting financial statements. You've got an article there on the ACCA's page about sustainability reporting. Yeah, you've got that article there. All right, you've also got, so that was under E, but I think you've also got under F, yeah, this story here, this article here about climate related disclosures. All right, so the information is here. Some inventory may become obsolete because of the effect of climate change. Absolutely, David. That's, again, a little bit of a lift, isn't it, from the standard? Look, there it is. There it is. You've got to make sure that we answer the question. So what I'm saying is that you need to be conscious to go out there and find this information for yourself. The ACCA have got good resources on their website, those key articles, some of which I've written. I've referred to you my podcast. And so take some sort of responsibility for finding out a little bit more about these issues yourself. Yeah. Now, this is a quote from the examiner's reports if we're talking about development application. But I've said that already. I've said it. Examiners said it. So hopefully it's there in your head. Now, traditionally, we have questions at the end. I've got a bit of a thing about cash flow, and I want to do a bit of a run on cash flow. But before I talk about cash flow, let me just pause for a second. Are there any general questions out there? So pretend this is the end. It's not the end. It's not the end. We haven't finished. I know we've still got another hour to go. But let me just pause for a second. Are there any particular questions on anything? You don't have to have a question, but I am just pausing for a minute or two. COVID situation in the UK is okay. There's a lot of jabs going on. The social lockdown has pretty much been lifted. People are behaving, some people are behaving well, some people are not behaving well. How many suggestions would you suggest to be practiced on the CBE platform? How long have you got? How many are there? Do as many as you can. Yeah? Do as many as you can is the answer. The more you do, the better prepared you are. I mean, ideally, you get them marked. You know, I do a mock exam myself. I do a mock exam service myself. I mean, I say ideally you get them marked so that you've got some kind of feedback and awareness. No, I think COVID-19 remains a current issue. Obviously, you're not going to be asked about jabs and everything, but it's how it can impact on a business. So impairment is an issue. Are you making staff redundant? That's provisions. Do you get hands out from the government? That's government grants. you're going to have to do a review on your financial assets and impairment. So I think, David, you're right. COVID remains a current issue because there is a lead time between the writing of the exam and the setting of it. Okay, the next section, the next hour is, or the final hour, takes me looking at cash flow, which is a little bit of a, I don't know what the word is, hit or miss. Because sometimes cash flow isn't there in the exam at all, and sometimes it is. If you've got pen and paper to hand, might help. Or some of you might be quick, because there will be some calculations later on, but I don't want to start with the calculations. I want to remind you that if cash flow comes up, that you won't be asked to prepare a full cash flow. Now, it doesn't mean to say in your study phase, in your tuition phase, you may have prepared a cash flow, fantastic, but you won't be asked to do that in the exam. What will happen going forward is that you will need to write about cash flow. And again, listening to the examiners at the examiners meeting, there was a undercurrent of concern that students were not as articulate and perceptive about interpreting cash flows as they might be. So let me try and remedy that situation. So why do we have cash flows? Cash flows are there to give information to the users, not to measure profit, not to measure assets and liabilities, but to measure cash coming in, cash coming out, liquidity, the lifeblood of the business. If you've got cash, you're solvent. If you've got cash, you're adaptable. If you've got money in the bank, you can choose to pay down debt. You can choose to pay a dividend. If you've got money, you've got the ability to buy a competitor if they suddenly decide to sell. So having cash gives you power, gives you adaptability, reassures you about going concern. Now, at the group stage, cash flow is prepared as if the group is a single entity. Yeah, just I don't know, worth a reminder. And the format of the cash flow is very loose. There's 3 headings: operating, investing, and financing. And operating is awkward because you get this reconciliation from profit to cash. So you're adding back depreciation, all that malarkey. Investing, what are you investing? So last month, I spent a lot of money, because last month I spent money on 3 things. I paid off some debts of my son from leaving university. Secondly, we went on holiday to Scotland. And thirdly, we bought a car. Of those 3 things, which is investing? Correct. You're buying non-current assets. Oh, university, yes. On one level, the university is an investment on one level, but I was paying off his debts. Paying off debts is a financing activity. Yeah. So investing activities is all about non-current assets, buying, selling, having a return on them. Cash in if you sell them, cash out if you buy them, cash in if you've got a rental income on an investment property. Investing activities, everything to do with non-current assets. Financing activities is all about debt and equity, borrow money, pay back money, issue shares, pay a dividend. Yeah. So cash flows are day-to-day operating activities, paying interest, paying tax day-to-day. Investing activities, buying and selling non-current assets and returns on them. Financing activities are to do with how do you finance a business, debt or equity. So very simple overview to explain. In or out? There are three headings: operating, investing, and financing, and then cash either comes in or cash goes out. Is a foreign exchange difference a cash inflow or outflow? Thank you. Thank you. Thank you. Thank you. Thank you. Correct. Correct. Thank you, David. Thank you, Ivy. Yeah, it's not a cash flow at all. It's an exchange difference. Yeah. David, it's not why it's reported in OCI, because exchange differences can be reported in P&L if they're at the individual company stage. So you don't, the distinction as to whether it's in P&L or OCI is not to do with whether it's a cash flow or not at all. The taxation charge in P&L, statement of comprehensive income, will not be the same as the tax that you've paid. Anyone want to have a little play with why? Nilam, I like that. Oh yeah, we're going sophisticated. Oh, deferred tax, brilliant. Sahimi, you're spot on as well. David, changes in the tax rate, absolutely. Yes, yes. The accounting profit is not the same as the taxable profit. That's building into the deferred tax. Hakim, the accruals basis, exactly. That's another way of saying that this year's tax expense is paid next year. Yeah, so there's a timing issue. Yeah, I think you've got that. I think you've got that. So let me recap. The reason why the tax expense and the tax that you've paid is not the same is because generally good. So you understand that. It's the sort of thing that you can be asked in the exam. When you buy a sub, it involves the outflow of cash. When you buy a sub and you pay for it in cash, when you buy a sub, that is an outflow of cash that is in investing activities. It's unlikely, but it's possible to buy a sub and the purchase of the sub be a cash inflow. Not to do with dividends and not a bargain purchase. No, not to do with dividends received. No, and not a bargain purchase. We're buying a sub. The transaction of buying a sub. Natasha, spot on. Natasha, Windy, spot on. Because what you're buying in the sub, the cash that's in the sub flows into the organization. So if you're buying a subsidiary that's got a large positive cash flow, that cash flow comes in as part of the transaction. And the purchase consideration could be shares exclusively. So if you buy a subsidiary with deferred consideration, or you buy a subsidiary with shares, no money goes out. It's perfectly possible to buy a sub and not spend any cash because you pay for it in loan notes, you pay for it in shares, you pay for it in deferred. And then you get the money of the subsidiary. So ironically, some companies who are short of cash go on a buying spree. If their share price is high, they can not an introduction to cash flow. Explain share-based payments. I'm asking you about the implications applying your knowledge of share-based payments in a very narrow situation, cash flow. During the accounting period, the P&L was correctly charged with an equity share-based payment. So there's two answers here. Number one and number two. And let me be quiet for a second. Yeah, let me give you a chance to think. Think before you write. Think. For number one, it is non-cash. Because if you charge a share-based payment against the P&L, no money changes hands. You're debiting the P&L and you're crediting equity based on the value of the option at the grant date. So Hakeem is right. It's a non-cash item. David is right. It's a non-cash item. EU Jin and G is correct. It's a non-cash item. And as a non-cash item, it would have been charged in arriving at operating profit. Depreciation is a non-cash item charged in arriving at operating profit. Impairment losses is a non-cash item charged in arriving at operating profit. Even profit before tax. So these items are added back. These items are added back. So the implication for number one is that you've got an expense that has been charged. It's not a cash flow. It's reduced the profit, but it's not reduced the cash flow. So it is added back in the reconciliation. Yeah. Now, for number two, during the accounting period, some options were vested, and because in order for the company, in order for the employee to exercise the option, correct, Raymond, it's cash in. In order for the employee to exercise the option, they have the option to buy the shares. So the employee pays money into the company. So the company gets cash coming in when the options are vested. If it was a SAR, if it was a share appreciation right, if it was a cash settled, then yes, the company pays money out. It's one of the beautiful things about options is that when they're exercised, the company physically gets cash. So if we've established that cash is coming in, operating, investing, or financing. If we've established that cash is coming in, is it operating, investing, or financing? Megwat is correct. Wias is correct. Yeah, Rahama is correct. And it's correct. Well, no. Whoa, sorry, I missed that one. No, it is financing. It is financing because it's the issue of shares. Why are we receiving money? We're receiving money because we have issued shares. So it's financing, Azrina. It's financing. What is financing about? Cash flows, debt, and equity. So it is the exercise of the option. Yeah, there is a cash inflow which is reported in financing activities. David, because the director, the employee is buying the share for $1 when it's worth $30. So that's a benefit. Because the exercise price is lower than the market price, because the exercise price has been fixed at the outset. And should the share price have fallen, the director, the employee won't exercise the option. So the exercise of the receiving an option as an individual is a win, no lose situation. Because if you've got the ability to buy the share for $10 in the future, if in the future the share price is 25, you will exercise. But if in the future the share price is 5, you won't exercise because you've got to pay 10. And if it's worth 25, it's in your best interest. A recording will be made available. Have a think. So there's a decision tree. There's a decision tree. Is cash coming in or out? That's one decision. And the other decision is it operating, investing, or you may not have come across this before, but let me tell you, in the exam, you will come across things you've not come across before, and you've got to work them out. NCI is part of equity. When you pay dividends to equity, dividends to NCI, that is dealt with as part of financing. This is money that goes out. This is money that goes out. It's not, this transaction is not day to day. This transaction is not about plant and machinery and buying more assets. This is a payment to the NCI. NCI is part of group equity. It's therefore part of financing. Well done, because I now think you understand that. I would be over the moon if this came up in the exam. I can't claim that it will, but the thinking process, the understanding process, the logical process, that will come up in the exam. And it's oiling that, getting the information out. That's what I'm trying to do. I'm not trying to put more information in. You already know about control to control. You already know about cash flow, and it's about linking it together. Why do we regard paying dividend to the NCI instead of paying dividend? When you're buying a sub, you're getting control of a new business. That is an investing activity. When you are paying a dividend to the NCI, you're doing a transaction with your equity, so that is financing. Purchasing of a sub, you're not buying a sub, David. In this situation, you're not buying a sub. You've already got a sub. You've already got 80%. So you're not, it's a movement within equity. Well done. Thank you, Annabella. Yeah. Thank you, Annabelle. Absolutely. Yes, because it is a transaction between shareholders. It is not the purchase of a sub. I didn't say we were buying a sub. It's a control to control transaction. You've got an 80% sub already. You're then buying a little bit more. David, I love your questions. You clearly have a good mind. You're open to learning, open to making mistakes, open to learning. Good, because it's intergroup. How much is appearing in the cash flow? Kay, I think Kay's got it. I think Kay's got it. Yeah. So the sub pays out 200, of which the parent receives 160. The sub pays out 200, of which the parent receives 160. Yes. Yeah. Kamaruddin, yeah, 20% NCI dividends. You smashed it. Financing activities. Adelina, you smashed it. Irene, yeah, 20%. Correct. If the payment is made to the parent shareholders, correct. Jiao Qin, correct. So 80% of the 200, i.e. the 160, because if you pay a dividend, you have to pay your shareholders on an equal basis. So 80% of that goes to the parent, fine, agreed, cancels. 80% of the 200, 160, cancels. Should we see what's next? You don't know what's coming next, do you? When we're looking at the indirect method, and let's face it, the indirect method is the one to look at, you're reconciling the profit before tax to the cash generated from operating activities. And one of the things that clearly does is to highlight to a user that profit and cash are not the same thing. Now, because we're adding back depreciation, we would expect to see more cash than profit. I would expect to see a business being profitable, but then pumping out more cash than profit, because that cash has got to pay the interest. That cash has got to pay the tax. That cash has got to buy replacement assets. Your day-to-day operating, your interest has got to be paid out of this. Your tax has got to be paid out of this. You've got to replace your PPE and you've got to pay dividends. Okay, if you run out of money, you can borrow at the bottom. You can borrow, but a healthy situation is that a business generates profit and generates cash. Now, if you're some sort of sexy IT startup, it may be that you're not generating a lot of profit, and it may be you're not generating a lot of cash because you're at the early stages of a business model, in which case you've raised an awful lot of money from the market. You know, you've got a funding round that's created the money that's come in through financing. That's okay at the early stages of a internet launch, of a you know, new kind of business. It's okay. But a mature business should be generating enough money to stand on its own 2 feet. Yeah. So the operating activity section, you know this. This is FR really. Yeah, this is FR really. Once you've adjusted for changes in the working capital, interest paid, taxation paid, pension paid. Right. We dealt with a fair amount of theory. We dealt with a fair amount of the ideas this, ideas that. Let's get black and white. Let's get right or wrong. Let's get number crunching. So pen, paper, calculator, whatever it is that you need. Can you work out for me, please, the cash generated before changes in working capital? And when you know the answer, bung it in the chat. 610 is becoming a very popular answer. Raymond thinks it's 610. Yipsy Long has decided to go 590. So 590 is quite a popular answer. So it's between 590 and 610. I guess the difference there is the current service cost. 610 is having a resurgence. 590 is having a resurgence. Just another few moments. Hasrina, 570, I like you. Yeah, striking out there. Okay, let's hope we get some sort of consensus of understanding on this. So where do I start? You start with profit before tax, yeah, in a cash flow, and you add back the finance cost. So far, I think we're in agreement. Yeah, it's operating activities, so you've got back to your 500. Depreciation, add back, it's a non-cash expense. Impairment loss, add back, it's a non-cash expense. The profit on disposal of PP, if it was a loss, I'd add it back. If it was a loss, I'd add it back. But it's a profit, it's been included, I therefore need to take it away. The expenses that you charge in pensions, current service cost, past service cost, settlement and curtailment, all increase the pension fund liability, none are cash flow. You're debiting the P&L to credit the liability. So a current service cost is a non-cash expense. If the current service cost is a non-cash expense, you're adding it back, and therefore the answer should be 610. The vast majority of you got that. Current service cost is an expense that has been charged in arriving at profit, but you haven't paid for it. So it is like depreciation. David, you are correct. Good. Well done. Good. Next problem. Every single number is relevant for the calculation of the tax that you've paid. The tax that you've paid is money which is going out. The tax that you've paid is in operating activities. So you've not only got an opening current liability, but you've got a deferred tax liability as well, a non-current liability. And you've got a charge in the P&L, but you've also got a charge in OCI. You've got an acquisition of a sub, and that had tax liabilities. You've got a closing tax liability, which is both current and non-current, but how much tax has been paid? How much tax has been paid? How much is out? 1 minute, 2 minutes. Have a little play, have a little go. 400, 200, 400, 200, 400. 400 is a popular answer. Let's hope it is 400. That's 400. Lots of people saying 400. Doesn't mean to say it's right though. Uvashini 400. Hiya. Good to see a couple of my students here. Mr. Lee 400. Julian 400. Oh, I do hope it's 400. Oh, Trisha, you've gone rogue. Fair enough. Right. Yeah, let's see what is what. The way I approach this is to try and reconcile the opening to the closing. And so in the beginning, I have a liability of 300. And then when I charge a tax expense, that makes my liability go up. So the opening liability, it doesn't matter whether it's current or non-current, it's a liability. It doesn't matter whether I've charged the tax in the P&L or whether I've charged the tax in OCI, I have charged the tax, and that makes my liability go up. So I'm increasing my liability. And if I buy a sub, I'm taking over their liability as well. And that wasn't there at the beginning, and that's not part of my P&L charge. So at the moment, I'm thinking that I owe 760 in tax. If at the year end, I owe nothing, if at the year end, I owe nothing, I must have paid 760. But at the year end, the amount that I owe is 360. 400, 400, 400, 400, 400. Well done. The amount that I therefore have paid is a balancing figure, is 400. Fantastic. Good job. Well done, Geraldine. Yeah, well done. Afif. Good one. Good one. Good one. Good one. Pretty much always going to be negative if you think about it. Although there might be, you know, disposals and whatever, you normally are spending money. 2 minutes. 2 minutes. How much money have you spent buying PPE? 2 minutes. 460, 340, 400. So the first three answers all come up with different numbers, but we're beginning to get some more votes for 340. Julian thinks it's 340. Ivy thinks it's 340. Farah thinks it's 340. Good, good, good. Irene thinks it's 340. Ong thinks it's 340. Good, 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 good. Once upon a time, there was 400. Then it was depreciated, which made it go down. Then it was, you could do a T account. I mean, if you've done a T account and you got it correct, well done. If you do it as a T account and you get it correct, stay with it. But if you do a T account and you get it wrong, then you're not any good at, you're no good at debits and credits. You may as well do a quick plus minus. Well done, Victoria. Revaluation makes it go up. The foreign exchange gain. So if it's an overseas subsidiary, there's an exchange difference on the overseas subsidiary, and that adds to it. So therefore, you're thinking, I'm thinking 400, 350, 460. I'm thinking it's 460 if we've spent no money. If we've spent no money, the closing balance would be 460, but the closing balance is 800, and I've included everything else. So therefore, as a missing figure, as a balancing figure, the answer is 340. Well done, City. Well done. Fun. Yeah, well done, Natasha. Operating, investing, financing. Financing is about issuing shares, paying dividends, borrowing money, repaying money, basically. One of the cash flows that's a financing is leases. You know, the money you pay to a lessee. Oh, some of you are quick. Look at that. Doesn't mean to say you're correct, but some of you are quick. Quick is good. Quick is good. If you're going to make a mistake, make a quick mistake. That's what I say. BB says 50. There's a few going for 150. There's a few going for 150, but I think you've got to take into account the foreign exchange loss. Got to take into account losses. Well, what do they do to an asset? Losses make an asset smaller. Losses make an asset smaller. But if you've got a liability, what do losses do? They make the liability bigger or smaller? Yeah, exactly. Yeah. So you're crediting the liability because you're debiting the P&L, debiting the whatever it is you're. Oh, lots of 150s now. Oh, lots of 150s now. Suddenly there's a run of 150s. Takes an honourable, mature person to say they've changed their mind. Well done. Fatin, yeah. Tina. Well, let's have a look. It's not going to be a T account. Opening obligation is 500, you then get some new leases, you have some foreign exchange losses because presumably some of those leases are in another currency. Fair enough. You could lease an asset in euros, or you could lease an asset in crams, and then there would be an exchange difference on the monetary item. So you might be thinking that your liability at the end of the day is 800, but it's not. It's only 650. Therefore, you must have paid them 150. Well done, Tina. Well done, Julian. On the right lines. Mm. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Operating activities ideally generate positive cash flows because you need cash to pay interest, to pay tax, to pay dividends, to replace your assets. Otherwise, you have to borrow it. If you're a startup organization, if you are an early stage IT web app kind of thing, in terms of the business life cycle, you're having to spend the money, so you won't necessarily have that cash being generated. It doesn't stop the business being successful. Consider the relationship between depreciation and PPE. If your depreciation is 200, but you're spending on PPE 600, you're expanding. Because depreciation of 200 is measuring the wearing out. Depreciation of 200 is the consumption.